Welcome everybody to the Savvy Investor YouTube channel. For those that don't necessarily know who I am, my name is Mike Ponte. I'm the founder of Savvy Investor and longtime Canadian real estate investor. Good to see everybody. Again, welcome to another session, another YouTube live from Savvy Investor. For those that are new to us, welcome. We have a lot of regular new topics and guest speakers that are joining us to talk about all things real estate investing focused. And again, we've got another great training session ahead of us as well. As you're joining on, make sure you say hello. Let us know where you're calling from, because we always love to see everybody's smiling faces and to engage with our fellow members, to really more engage and really be able to get a lot of your questions answered as well. So again, another great training session. Got lots to talk about. And today's session is really about kind of the scaling of our real estate investing business. But sometimes it's really difficult, and we don't have enough funds. Anybody else need money? I'm not sure if anybody else does. If it's just myself, I'm always looking for cash, and hopefully you guys are as well too, right? So how do you scale your businesses, your real estate investing business? And the real secret is about raising money. That's how you do it much faster. That's how you see a lot of seasoned investors doing this, and actually companies in general. This is a main process that they tend to follow, is raising money so they can actually scale. Okay. But for many real estate investors, this can be actually a huge obstacle. But the obstacle is kind of right here, right in between these two ears. And it's more of a mental obstacle. So it's really about the lack of know-how, how to present, where to find money partners. But more often than not, it's actually a little bit about the lack of confidence and in regards to approaching it, is an even more feeling of, why would somebody invest with myself? I'm not sure if anybody else is feeling that same way too. But I know for myself, many years ago when I first got started, those were obstacles in my head. But I'm hoping today's presentation will help address some of those mental obstacles, to help support you. Again, it's important not to just kind of throw your hands up and say, I just give up. I don't understand all the aspects are. But that's the key, is if you don't understand how to do it, you've got holes in regards to your approach or your presentation, this is the time to kind of fill in those gaps. And for a lot of people that are watching today or watching the recording, this is probably why you're here, is you want to understand some of the things that are challenging you so you can overcome this. And I've kind of shared this in my previous presentation, Investing During a Crash. So for those that haven't watched that on our YouTube channel, make sure, and I encourage you guys to watch it. But right now is a crucial time. For those that are wanting to grow, raising money is crucial right now, because there are opportunities that are happening right now and in the future as well. So it's all about getting yourself prepared if you really want to grow. So if this is sounding like you wanting to scale your business, but are struggling to raise capital, not to worry, you're not alone, which is why we're bringing in the big gun today to share on this great topic to help us savvy investors. I am very, 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 very fortunate to have a longtime investor, longtime educator, author, podcaster, Mr. Dave Dubeau, joining us to share some of his amazing wisdom on this particular subject. And for those that don't know Dave is a veteran when it comes to the real estate investing world. He's got years of experience investing, managing, educating on this topic, on raising private capital. And Dave is very highly recognized in the investing community. I've actually been following him for a very, very long time. He's an avid speaker, presenter, and he's in many different social media platforms and podcast platforms out there, which include one of his own called the How to Raise Capital 101 show, which is part of the topic today, is how to raise capital. So make sure you take a moment to check out his podcast, as he has some amazing topics and guest speakers as well. And again, very honored to have him join us today, as he's an extremely busy person. So before we get started, I just want to remind everybody, this is a YouTube live. So if you want to ask questions, post them in the comment section. I can see you, and I'll do my best to try to get those questions answered during the time allotted. If not, we will make sure we get those questions answered after the fact as well. Okay, so to help you kind of get things rolling along, if you haven't had the opportunity yet to begin with, can you guys do me a small little favor? Hit that subscribe button and help us kind of grow our YouTube channel. Like for us, it's really about focusing on growth and providing value to our members as well. So this keep you guys constantly informed. Secondly, if you haven't already, make sure you go to our website, thesavvyinvestor.ca website. There is a ton of free resources for you. Make sure you take advantage of getting access to make sure you get access to our newsletter. Lots of great information to support you as well. Okay. With that being said, let's get to the kind of topic at hand. And I do want to welcome our guest speaker, Mr. Dave Dubeau. How are you doing today, sir?
I am fantastic. Thanks for having me, Michael. I appreciate it.
It's great to have you, sir. How are you been? Things have been well?
Things have been well. Long time no see. Actually, it hasn't been that long at all. We were talking earlier today to get prepared for the call, but I hadn't seen you since your trip to Portugal. So
yeah, we were kind of reminiscing actually when we connected, because he's heading off to Spain. I know feel really bad for the poor guy, right? For sure. So, Dave, I kind of gave you a little bit of an introduction, but maybe for those that don't necessarily know who you are, maybe you can just kind of give everybody a little bit of a tidbit, who you are, what you do, tell a little bit about your story, if you don't mind, just so everybody can get a better sense of who Mr. Dave Dubeau is.
Oh, thanks, Michael. I've been in the real estate game one way or the other since 2001. I actually got started in San Jose, Costa Rica, where I was living for about a decade. Did a couple of little, I guess we'd call them pre-foreclosure deals there. Moved back to Canada in 2003 to lovely Kamloops, British Columbia. Brought my poor, long-suffering little Costa Rican family along with me, kicking and screaming up to the Great White North, and had to figure out what I was going to do. Because I hadn't been able to sell my business in Costa Rica, so I didn't have very much money. I've been gone so long, I didn't have any credit. Kamloops was a brand new city for us, and I'd been self-employed a long time, so I was pretty much unemployable. So what was I going to do? And I saw one of those late night infomercials. You too can get rich in real estate with little or no money. I said, perfect. That's what I got. Little or no money. Set away for the course. And it was all about creative type deals. And I dug right in, did a bunch of those. My claim to fame was 18 deals in 18 months, which sounds pretty good, but some of those were just crappy little trailers and things like that, but got very good at marketing around real estate investing. Took some time off. That's probably where we connected, Michael, as I was helping an up and coming real estate guru here in Canada get going with his business. Did that for a number of years, got back into the game of actively investing in real estate around 2010. And that's where I started raising capital. Well, that's where I fell flat on my face trying to raise capital in the first place. And after that very painful experience, I decided, hey, I want to figure this thing out. And I came up with my process for doing it, which I call the money partner formula. Worked really well for me. So with single family homes, raised just under $1 million for those kind of deals. Nice. Then I started getting up into multifamily properties, not quite to the scale you're doing, my friend, but got into those multifamily deals and raised several millions of dollars for deals that I was involved in there. And these days, I'm more of a passive investor because, Michael, quite frankly, I suck at tenant and property management. No good at that stuff. Don't want to become good at that stuff. Would rather partner with people who are good at it. So these days, my main focus is I help other real estate investors, especially the mom and pops who are just getting started with raising capital. We help them to find private money partners and raise private capital for their deals.
Love it. Love it. I'm sure there's lots of people wondering how to do it. If that's you guys, make sure you raise your hands. I want to see who's wanting to raise some money. So you know what, Dave, I like asking my guests this because, as you know, we're living in some kind of interesting times and markets are interesting. And there's a lot of people sitting on the sidelines. There's people not necessarily knowing what to do or where to go. And again, this is the Dave Dubeau crystal ball. So I want to be very clear.
Which is pretty fuzzy and foggy at the best of times, my friend.
For sure, right? And lots of caveats that go along with this and all this stuff like that. But I think the important part is let's get a sense of, I always like to get a sense of what do you think people should be doing right now? And I joke around and with yourself, and it's like we're kind of the old school guys that have been around the block multiple different times.
Yeah.
And for a lot of investors, this is their first rodeo, and they've not seen stuff like this before.
Yeah, they can't fathom 5% interest rates.
Oh my God, crisis, right? But what do you think people should be doing right now? And again, we're talking in generality, and I know the topic raising capital. What's your sense, right?
Buy. Here's the thing, right? I mean, we can try to time the market. We can try to do all this kind of stuff. But if you're following Michael's very astute training about focusing on fundamentals and and cash flowing properties and these kind of, if you're not in a speculative kind of strategy, I would highly recommend that you buy. Now, if I were in the flipping business, might have to be a little bit more cautious.
Yeah.
If I were in the certain other kinds of speculative type businesses like rent to own, certain kinds of rent to own that are appreciation based, where you're really only making money if the market goes up,
Yeah.
then I'd be a little bit cautious if you're in a short term type of a deal like that. However, if you're in the long term game, I think, well, I don't think, I know that when the economy goes through upheavals and changes like this, there are tons of opportunities
Oh God, yeah.
for savvy investors.
Yeah.
That's
Yeah.
good name of your program, my
Oh,
friend.
I know. I know.
Savvy.
I like that idea. I think my wife came up with it. Actually,
Did
it was
she?
her. Yeah, I think it
Yeah,
was.
you married well. Yeah.
Yeah, exactly. So, okay, so let's get to the topic at hand. So, for a lot of people here, and thank you for that. That's great. That was the Dave Dubeau crystal ball, and I'm actually kind of in agreement with a lot of those things. To be honest with you, with that being said, comes the point of raising capital, and if people are looking to take action and looking to grow and expand their businesses, and we've touched on it, but what have you seen in your experience? Why should investors start raising capital to begin with? What would be the reason for this? Some people are brand spanking new and they don't necessarily, they may be buying their very first property and they're just like, I don't need to raise money right now. And maybe that's true. But maybe in general, why do people need to raise money? Why do investors need to raise private capital to begin with? What do you think? And maybe the second part to that question is, when should they start?
Yeah, well, that's a good question. So I think people need to raise money because sooner or later, this is what happens. They hit the wall. They run out of their own cash and or credit to buy more properties, and they get stuck.
Yeah.
They stall out. They fizzle out. And unfortunately, this is what happens to the bottom 80% of Canadian real estate investors is they are do-it-yourselfers. They're lone rangers. It's just me, 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 me. I want to control everything. I want to own everything. And quite frankly, they're greedy bastards. They're not willing, or they don't like the idea of sharing their deals with other people. So they'd rather have a teensy weensy little pie that they have the entire thing. In other words, they have a Pop-Tart instead of getting one of those big Costco pumpkin pies that they've got half of and investors have got half of because they've financed the deal. So why should they be thinking about raising capital? Because if you want to scale, if you want to grow your portfolio, if you actually want to accomplish whatever the goals were that you set out for yourself when you started with real estate investing, bottom line is you're going to have to use other people's money. Heck, you already are. If you're buying property, you're using the bank's money. You're coming up with down payment money. The bank is financing the majority of it, and you're using their money. They own the vast majority of your property for the first number of years.
Yep.
So all I'm suggesting is, hey, if you want to scale bigger, what if you got investors on board? They put up the money for the down payment. They put up money for the renovation costs, the closing costs. You bring in the expertise and you share the profits.
Right.
Just a win-win scenario. You're able to grow, you're able to keep buying properties, and you're helping your investors do something they can't do or won't do on their own, which is be an active real estate investor. Does that make sense, Michael?
Totally does. It makes 100% sense. And I'm in agreement with you big time. It's just, there's a lot of people out there. That's what they do, is exactly like you said. They become the Lone Ranger. I love that. I'm going to steal that. But truthfully, that's the case, is they're taking the time to expand and grow. They're saving up down payments and they're doing it kind of like really slowly, one at a time. And it could take years to actually implement a lot of these things. And I think one of the biggest hesitations for a lot of people is, I don't really want to work with money partners. I don't want to work with other people. I just want to do my own thing. And the reason for that is, part of it is kind of greedy in some ways. In some ways, it's just the management side, which I can understand too, because I think that's some of the cons that come along. We'll get to that question later on too. Yeah. But I think at the end of the day, if you look at a lot of seasoned investors, and I know, Dave, you've been around a lot of seasoned investors, you've interviewed a lot of people, and you've seen people develop and grow. I think you would agree that's how they've really started to grow their businesses instrumentally, is just by partnering up with capital and money so they can work on bigger, more deals. And correct?
Yeah. Well, yeah. Over the years, I've interviewed over 360 successful real estate entrepreneurs
Wow.
from around primarily North America, from around the world as well.
Yeah.
Every single one of those successful ones has used other people's money to grow their portfolio. That's basically that's the bottom line. And actually, Michael, this around now might be a good time to show people visually what an impact even one investor can have on their bottom line, not just their cash flow, but their net worth over time. So we talked about this earlier about the having a little bit of fun with math. And don't freak out, you guys. I'm not a math guy, but this is profitable math. We're going to love it. I'm going to show you, if you're up for it, Michael, show people what the lifetime worth of an investor is to them. And before I do that, I'm just going to share my story about how I figured this out. So when I was living in Costa Rica, I had a language training company, and I learned from this guy named Jay Abraham about the lifetime value of a client. Called it LTV. Well, that has a completely different meaning in real estate lingo. But when I crunched the numbers, I realized that a client for my corporate language training company was worth $12,000 to me over the lifetime of our working relationship. And at that time in Costa Rica, Central America, that was like big money. I was like, holy crap, that's awesome. And when I clued into that, then I understood how much time, effort, and money I should put into bringing on new clients.
Right.
And by understanding that, none of my competitors understood that. I was able to grow my little company from the bottom of the pack to the top 3, and we had 50 competitors. So, and I did that in about 2.5 years. And a lot of that was just understanding that number. Now, fast forward, whatever it was, 15 years, and I'm starting to do real estate and I'm starting to raise capital. And I was doing single family homes. I was doing a rent to own strategy. So kind of a short-term thing, 2 to 3 years. And I thought, hey, why don't I apply this to see how much an investor is worth to me over the lifetime, right? Because my investors are one of my clients in that business.
Yeah.
And I crunched the numbers. And as far as I know, I'm the first guy that applied this to investors in real estate investing. And the number was $120,000. And I went, holy crap. There I was 10, 15 years ago, thrilled with $12,000 in that business. Fast forward, here I am in real estate. It's 10x the value.
Yeah. Nice.
And that blew my mind. That's why we're in this business, Michael. We're not flipping burgers. We're not in a very transactional thing with low margins. We're in a high margin business. So I've been teaching and showing people this for years. I just recently got off my rusty dusty and created a little calculator, which makes it a lot easier. So let's see if I can pull that up. You might have to give me permission there, my friend.
Yeah, let's do that. I hope everybody can kind of see this right now. It looks like it. So. Yeah. Looks cool. Cool.
All right. So, Michael, are we okay using either an example? I think you were talking about you've got a student that's going through something right now. So we won't mention any names, but we'll use the numbers and kind of fill in the blanks here. So first of all, what kind of a deal is it that this student is working on?
Yeah, so this one is a multifamily deal. I don't want to get into too much details because this is their private deal. But for them, they're purchasing, or the average price, what they're looking for property. Asking price currently is about $800,000. So that's what they're working on right now. So it's a multifamily deal. It's one of the students that I'm coaching to help support them in purchasing multifamily properties. This is actually their second multifamily deal. Okay.
Awesome. So it's a long-term buy and hold. Can we use a 10-year time frame?
Yeah. 10 years. 10 years is perfect. That's exactly what it is. Yeah.
All right. Are they getting a discount on this deal?
They are. Yeah. They were able to acquire this property at about $725,000. So
$75,000 off. Well, that's close enough. All right. So we'll say they're getting a 9.4% discount. So they've created $75,000 of instant equity. Now they're not seeing that at a profit right now, but that does count towards their net worth and the total value of the deal here. Yep. All right. So down payments and all that kind of stuff. What are we looking at there?
So we're looking at 30% roughly in that vicinity. Yeah.
30%. All right. So approximate mortgage rate right now.
Let's keep it at around 5%, somewhere in that vicinity.
5%. Okay. Yeah. Very good. 25-year amortization or 30? Yep. What do you think it is?
Yep. 25 years.
So here's what we're looking at so far, you guys. So they got instant equity of $75,000. And over 10 years at 5%, they should be paying down their mortgage by about $144,000. Does that look
Nice.
about right,
Yeah,
Michael?
that sounds right.
Okay, very good. Now, are they going to be doing some improvements on the property and increasing the value of the property?
They are, yes, for sure. Yeah.
What's
So
your
we'd be
best
looking
guess
at
on what that's going to look like
it's
short term?
probably close to around 10%, somewhere in that vicinity.
So they're going to be increasing the value about 80 grand
Yep, that sounds right.
of whatever they put into the
Yep.
expenses for doing that, right?
Mhm.
Excuse me. All right. So there we go. We got forced depreciation of $80,000. Now, conservatively, what do you think the monthly cash flow is going to be on this once they stabilize the property?
Yeah, we're looking at about 825, somewhere in that vicinity after the refi. So,
825 a month?
yep.
Let's just say 800 to be conservative.
Sure.
So over a 10-year time frame, we're looking at about $96,000 in
Mhm.
cash flow, correct?
Yes,
Okay.
for sure.
All right. Now, market appreciation, we want to be conservative, but we want to be realistic as well. So
Mhm.
on average, over a 10-year time frame in Canada, properties tend to go up about 3% a year. Is that okay, or is that too high? Is that too
Yeah,
low?
I think we stay conservative again in this particular
Can
case,
we
and I
say
think this is
two?
good for a lot of investors too. It's just, you know what, it's just a number. But if you stay at 2% over a 10-year time frame, for sure, because I would take into account the first 2 to 3 years right now, probably not a lot of appreciation, right? So,
Yeah, but if they had bought it 2 or 3 years ago, what would they have looked
oh
at?
yeah,
Exactly. So
yeah,
again, it's cyclical, but let's be conservative. So this is exceptionally conservative, 2%. All right.
yep, I'm good with that.
So looking at the numbers here, we got instant equity, 75 grand, mortgage pay down 144. We're forcing up the value by 80 grand, cash flow 96,000, market appreciation again over 10 years, 192,000, which is pretty reasonable on an $800,000 property.
Yep.
Okay, cool. So total profits over the 10 years, theoretically, if all of this adds up, should be about $588,000. Does that sound about right?
It does. Yep.
Okay, so is your student going to be bringing on money partners, joint venture partners to do this deal?
They will have 3 partners involved in this
So
acquisition. Yes.
what's the profit split going to be approximately?
So there is
Him?
an arrangement here where they get 35% of the deal and the investor, sorry, they get 35% and the investors get 65.
So your student gets
And
35% and his 3 investors between them get 65% of the profit.
correct. And there's quite the structure, just for people that don't know, this might be new for them, but we teach things a little bit different in the multifamily space. So for those that don't understand this is new to them. It's a different way when we approach it in the multifamily space. So don't get all caught up. It's like, why isn't it 50-50? There's a reason for
Well,
that.
yeah,
For
exactly.
another,
The bigger the deal. Yeah, no, and I've done deals, Michael, where it's been 70-30 and the investors,
yep,
the bigger, and I'm sure you've seen that, the bigger
yep,
the deals, the bigger the syndication, the lower the percentage to the active partner, the bigger the
correct.
percentage, because
Yep,
you just have to make it worth their while.
yeah,
But even
exactly.
so, we're looking at a $200,000 profit to your student over 10 years. It's not all up
Right.
front with none of their own money in the deal. Is that correct?
Not bad.
That ain't
Yeah,
bad.
looks pretty good.
That's better than flipping burgers at McDonald's.
Yeah, I would say so. Mhm.
All right, now let's figure out what the lifetime worth of an investor is for this student. So their average profit on this kind of deal is 200 grand, 205 grand over 10 years.
Yeah,
How many investors do they need to do this kind of deal? You said 3?
let's say 3. Yep, it's 3 in this
Okay.
one.
And let's take into account repeat business. So
Mm.
conservatively, if your student does a good job and his investors are happy with how things are going, how often do you think they will reinvest with him or her in future deals? Conservative.
Yeah, and like realistically, it's normally between 2. It's about 3 time turnover is normal, and especially when you've done a really good job with your money partners, they're happy to flip that over and over again, right? So
All right, very good. So needs three investors to do a deal like this, but they're probably going to do 3 deals with him over time. So far, an investor is worth $205,000 to your student. Now, we also have to take into account referrals because our investors know other people with money.
absolutely.
So we do a good job with our investors and we're proactive about seeking referrals and testimonials and things like that. We can get introduced to their friends and family who also have money, and we can get those people to invest with our deals as well. So what would you say would be a conservative number of referrals.
Well, let's have some fun with it. Let's just say it's one. And you know
Yeah.
what? I think that's actually low, right? Because,
Good.
you know,
Well, let's
normally if
be,
you do a good job, but let's keep it simple and let's just keep it realistic, right? So,
there we go. So that means that each one of those investors over time will probably refer one more investor to them. So we've just doubled the value of our investors. So the lifetime worth of an investor for your student in this kind of deal is $411,000. No, $411,877.
yeah, amazing.
It is pretty amazing. I mean, think about it. The average Canadian income, average household income last time I looked was just over 65 grand. So
Yeah.
how long would it take the average Canadian family to create $411,000 of wealth? Here's the answer. Probably never, right? Unless their own house equity. That's about it. That's the only way this is what one investor is worth in this scenario.
What a great example and a great answer to that question is, you know, why bring in money partners and why bring in capital, or why do you do private capital raising when you see these types of things? And again, we're just talking one deal. And again, if you're doing multiple deals in this type of fashion, you can see where the value really starts to kick in. And again, why we are involved in this game, because you see how it compounds like this. So great. This is awesome, Dave. Really, really great.
Now here's the other kind of mind-blowing thing. Our investor is worth $411,000 to us. Well, guess how much we're worth to those investors?
Yeah.
We have to take the referrals out of there, but we are worth $205,000 to each one of those investors by bringing them on board with our deals.
I want everybody to remember that that's watching this live, because we're going to get to a question. And the biggest, one of the obstacles that we tend to hear is, why would they want to invest with me? And we'll get to that question. I'll ask Dave this, but don't forget what's just been presented about what it's worth to them and why. So just remember that slide. So that was awesome, Dave. Really great. Thank you for sharing that with the group. I'm sure everybody loved that. That was great.
Awesome. And I think you're going to give people the link so they can go fool around with that calculator. I'm so proud of it.
Sure.
I just got this thing built last week. So
love it. Awesome. Yeah. So stay tuned, guys, to stay on, and then we'll get you guys all that information. So, so one of the questions I love to ask, especially for those that are in this field, Dave, is it's kind of like the chicken and the egg. You know, what comes first, the chicken or the egg? And in this reality is, what comes first? Is it the property, or should you be raising money first? Property, money. In your perspective, what do you feel is the right strategy? Because there are people doing it in both different ways, but what have you found been, I guess, maybe the most successful?
The money always comes first, Michael. The money always comes first. I would like to find out who invented that saying, just find a good deal and the money will find you. And I would like to smack that person right upside the head, because they have done so many real estate investors a horrendous disservice. And I suspect it was some real estate guru who'd already done a bunch of deals, already had a platform, already had a bunch of people following them. You know, these days it would look like probably on social media or something like that. So for them, yeah, it's super easy. I mean, if you look at somebody like Grant Cardone or Robert Kiyosaki or some of the big players, they can basically mention something on their YouTube channel and get a flood of inquiries. Well, good for them. However, you and I have not sold a gazillion copies of a purple book yet, nor, and chances are most of us won't. So what do? So we don't want to wait until we got a deal on the go. And I'm speaking from personal experience, right?
Yeah.
I remember when I first started raising capital, I did like everybody. I self-financed, got my first couple of deals done, ran out of cash, ran out of credit, putzed around. And of course, that's when the perfect deal landed on my lap. And I had 2 weeks to raise 85 grand. It was a little single family home. No big deal, right? Well, this was quite a while ago, but no big deal, except I hadn't done any preparatory work for this, right? I hadn't prepared for this. So there I was scrambling. I had 2 weeks to remove financing subjects on this deal. And I didn't know what the hell to do, because I'd heard all this crap. Just find a good deal. The money will find you. But it's not just woo-woo. The universe is going to provide for you. You got to do something. So I'd also heard, hey, if you want to raise money, start calling people, dial for dollars, cold call people. Well, I sucked at that. That didn't work for me. I just turned off a bunch of people.
Yeah.
I tried networking and schmoozing. That didn't work for me. Again, got a bunch of weird looks, didn't raise any capital because it was just desperate. The desperation oozed out of every pore.
Yeah,
so I ended up losing that deal because I didn't have my investors lined up. So that's when I decided, hey, let's turn the whole thing around. The chicken and the egg for me is the money always comes first. Get your investor ducks in a row and then go looking for properties, or at the least do both at the same time.
Yeah. You and I, we've talked about this before, and Dave's been a speaker at our Elevate Mastermind group. And that's one of the things I appreciate, Dave, because we share a lot of a very similar mindset when it comes to this. And it's really, really important that we share the same reality, because it's true. You know, you got to have the money first. It avoids a lot of those same issues that Dave's just highlighted, is the scrambling effect, because your presentation just so shows and just oozes desperation, right? Yeah. But here comes the next part to this is, you know what, and I see this a lot on social media. Everybody's pitching their deals and they're posting and, you know, 80% return on their investment. And the reason why they tend to do that, no offense to those that do, is because that's
I want to offend the ones that do. That's
okay. So I'll leave that there.
I'm offending them. It's stupid. Stupid if we're doing that.
Yeah. But the reality is that's the easy stuff. Okay. The hard stuff is actually a lot of the relationships. And when you learn how to do that, it's not really that difficult, but it is a major obstacle for people. So they're struggling finding the money. Okay. So, you know, and you highlighted this yourself. It's just like, you know, it can be hard. So where do you find money partners? You know, how best do real estate experts right now attract money to their deals? You got some suggestions and tips in regards to what people should be doing and how to promote themselves in that type of way?
Yeah, well, I highly recommend they shouldn't be doing what you were describing, which is pitching the deals on social media.
100%.
There's this little thing called the Securities Commission, the securities regulators. Every province has one. The U.S. has got the Securities Exchange Commission. You're breaking the law, as far as I understand, if you're doing that, if you're doing direct outreach without having set up, you know, offering memorandums and all that kind of stuff, which most people haven't, you know, you could get yourself into some serious trouble. So
yeah,
caution, don't do that. Here's what I always recommend, Michael, especially when we're first getting started. Focus on your network. Focus on people who you already know and who already know you, because that's the fastest, easiest, and quickest capital you're ever going to get access to, especially when you're just getting started. Because again, you got to be logical about this, folks. I was completely illogical when I was trying to raise capital, right? I wasn't thinking straight because I was desperate. I thought anybody with a pulse and a checkbook could be a good investor. And I would have been one of those spammy guys on Facebook too, if Facebook had existed back then.
Yeah.
It didn't.
Yeah.
But here's the thing. These days, you probably need somebody to invest at least $100,000 with you to make a dent in anything in Canada, right? So if your minimum investment's $100,000, that's a significant amount of money. Yeah, the person who invests $100,000 with you needs to know you, like you, and trust you with their money. If you're going out to strangers, they don't know you, they don't like you, sure as hell don't trust you with their money. So you're starting from scratch, and it's very, very difficult. So focus on your existing network first. We've worked with hundreds of clients over the years, Michael, and we see that, and on average, people have access to somewhere between $1.5 and $3 million of capital from within their existing network already. So let's start there first.
Yeah, good. So let me ask you, you and I are both on the same page on this thing. And
I'm glad we haven't gone to a fight yet.
Not
we
yet.
haven't had to arm wrestle about any stuff.
So far, so maybe I'll have to go to Kamloops, but anyway, that's fine. Or, you know, I'll meet you in Spain. That might even be more fun. But here's another thing. So let's, you know, when we've heard this a lot, and I'm sure you have too, is you kind of deplete your base, okay, your inner circle, your friends and family and all that stuff like that. And then all of a sudden you're trying to expand out. And I agree with you with you know, you got to be careful with Securities Commission for sure. You know, based on individuals that are maybe looking outside of that box. And, you know, I always say it's a gray zone. It's not the gray zone, but it's very dark gray, right? It's there. But the reality is, what from a marketing strategy perspective, do you have some suggestions of how people should be doing this? And again, if they're not pitching deals, they're not doing it in that type of fashion, what's the best way to market themselves to others that are outside of that inner circle, I guess.
I got a really good shortcut for people here, Michael. I think it'll be very, very helpful for folks. And it's really overlooked by a lot of people. And here's the secret. Get out there and get active with your local real estate meetups, your local real estate investment clubs, real estate groups, whatever that looks like in your area. Because here's what I found, and let me know if this resonates with you, Michael.
Mm-hmm.
I've spoken at dozens of real estate investment clubs across North America.
Yeah.
And it always seems to be about the same way. The good old Pareto principle holds true for that as well. And what I find is in any real estate club, there are about 20% of the attendees who are actively doing deals.
Yeah, agreed.
And there are about 80%, could be 70, 75, whatever. The majority of people are sitting on the sidelines waiting to get into their first deal or their next deal or whatever. They're afraid or hesitant to take that first step. But here's the beautiful thing. They've already drunk the Kool-Aid about the big benefits of real estate investing. Otherwise, they wouldn't be going to the real estate investment club month after month after month, right? So you've got a great group of people right there who are poised and eager to get into the market, but they don't want to go by themselves. So here's the trick. Start attending these local real estate investment groups, actively attending. So that doesn't mean go in there and just kind of self-promote and be spammy. What that means is go in and volunteer, help out, and become a familiar face as one of the leaders in your local club. And trust me, they will love to get some help because most local real estate investment clubs, it's one or two people that that are doing pretty much darn near everything.
Yeah.
So even if you go in there and you're just taking attendance, you're just signing people in at the front of the room and saying hi and greeting them, or you introduce speakers, or you do, if you're a little bit more outgoing, you do a presentation from time to time, something like that.
Totally.
Just get out there and be known. And then when most real estate clubs have some sort of option, hey, have you got a deal? You're looking for something's going on. So always stand up there and say, hey, my name's Michael and I'm doing multifamily investing. And I'm looking for people who want to joint venture with me and join me on the ride, something like that. Just get the word out. So that's a wonderful way to expand your network, massive shortcut, because you're dialing the people who've already drunk the Kool-Aid about real estate. And that's a massive shortcut for you.
Yep. I love that. And I think, and you and I, again, we're kind of a little old school that way. But when I first got started years ago, around 21 years ago, maybe 21 years ago, it was all about networking because there wasn't a lot of this social media stuff. It was like shake the hands, meet the individuals. But I'm going to tell you, that was very valuable for me many years ago. One of my biggest investors who currently owns 20 properties with me, one person, was from an event.
What's the lifetime worth of that guy for you?
Exactly. And lots of referrals. And so with him, I sat down with him at an event and, we talked and we just connected. Right. And I'm a big believer that it's not about quantity as it is about quality, especially in networks you don't want to be handing out your business card to 1.5 million people. It's just like connect, engage, determine which is the right fit for you. And I think to add more to what you've even said, which I totally agree with, is, in this world where you're doing social media right now, it's not about pitching your deal. I think it's about sharing, letting people know who you are, what you do. And it's not like, oh, this is, Mike Ponte here again. Here he is with another deal. I know another 40% return on your investment versus, hey, look, Dave's constantly providing value or sharing his journey about, hey, just filled my new investment team, or I'm out in Calgary looking at the different markets. And the more people get a chance to see who you are and what you're involved with, maybe updates on renovations, and it's not about pitching or selling, they just get a chance to know who you are. And then it just happens. It's just these individuals just tend to connect with you and you'll be surprised. I'm sure you get this all the time. Just, I've been following you for a long while, but I've not done this, commented or liked, but I've just been watching.
But I feel like I know you.
Yeah. I feel like I know
and they do. And they do know you, right? Because you've been sharing. Exactly. Now, I still think face-to-face is always better and safer, quite
100%.
frankly.
For
Uh,
sure.
but yeah, definitely the social media stuff. And I think your take on it, I agree with that 100%. The role of social media is not to pitch deals.
Yes.
That's dangerous. The role of social media is to share and show people that you're actively doing it.
Yeah, love it, love it, perfect. So let's take it to the next level here. So,
Sure.
and again, guys, if you've got questions for Dave, this is a good topic, and I hope you guys are paying attention because right now, everybody should be focusing on this. From my perspective, I know I am big time. I'm here to raise money, big time, and so, but at the same time, I'm qualifying my people too.
Mhm.
But with that being said, there's going to be opportunities. There's opportunities now. There'll be lots of opportunities in the future. So as we talk about trying to find money partners, and hopefully that resonated with everybody, here's my next question to you, Dave. And I think this goes right up your alley big time because one of the things I find is, you get these money partners, and I am so guilty of this many years ago. My first presentation with my money partner was 3 hours long.
Oh my God.
Painful, painful, right? And so, what you get to that point, you've got somebody that's interested. How do you present to these individuals? What advice do you give these people? Because I'm going to be honest, I get deals sent to me constantly, and I do respond. I'm always looking for deals. I'm happy to partner with people. Okay, so don't bombard my inbox just yet. But the reality is, I'm always looking. But what I want to understand is the individual itself. So I see many investors, they get right into the selling mode and they start to pitch. And I find them doing it always completely wrong. So the question to you is how, based on your experience, based on how you teach and share with individuals, what's the best way to present to these money partners that have success?
Yeah, well, the first thing is how it's all set up. So our whole goal is instead of pushing our deals on people,
Yes.
what we're trying to do is use marketing to create curiosity, to get them to come to us, to get them to raise their hand and say, "Hey, Michael, that real estate thing you're doing, that sounds kind of cool. I'd like to find out more." All right. And then we have a meeting with them and we educate them. So
Yeah.
it might be a little bit more of a two-step process. So my whole goal, Michael, is to get a bunch of investors lined up, ready to go, waiting in the wings, so to speak, who've signed off on an expression of interest. So they haven't necessarily cut me a check for 100 grand each, but they've signed off on expressions of interest, which say, "Hey, Dave, when you've got a deal, I want first dibs. I want first
Mhm.
option on that deal." So that
Right.
makes life a lot easier for us, Michael, because that way, that first presentation is very high level educational, right? So we want to talk about what we're up to with real estate investing, a little bit about our background, our track record, and we want to show the other person what's in it for them to invest with us. But I guess if I had to boil it down, that one of the big tips I've got for people is keep it stupid simple.
Yeah, totally.
Keep it super simple.
Yeah.
Whatever you want to say, KISS, right? Because here's the challenge, Michael. Just like you, back in the day doing 3 hours, most of us are real estate nerds. We love this stuff. I mean, why the hell else are people watching this on YouTube? You're into real estate investing. Most people would rather watch Netflix, right? And we got to remember our investors are not necessarily like us. Our
Hmm.
investors are more like normal people.
Yeah.
So we don't want to overwhelm them with too much data, with too much information, with too much jargon. And a lot of people make this mistake. They like to
Yeah.
show off how much they know,
Yep.
how smart they are, but they end up making the other person feel stupid. And when you
Totally.
make your investor feel stupid, guess what? They're not going to invest with you. Right? They're simply not. So keep it super simple. Cover the big, broad strokes, a little bit about yourself, your background, a little bit about the market you're investing in, why it makes sense. Again, big picture. Don't get
Yeah.
too much in the minutia.
Yep.
Then talk about the strategy that you're focused on. So, for example, Michael, you focus on multifamily properties. So, I would talk about the big benefits of multifamily. I would simplify it into maybe 5 to 7 simple steps that I walk people through. Here's how we do a deal. Ding, 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 ding. Always bringing it back into what's in it for them, the big benefits. But then I also do something a little bit counterintuitive, Michael. I recommend that we show people some worst case scenarios, right? Because it's most people, when they're presenting a deal, it's all sunshine and flowers. Here's our projections. Here's how things are going to work out. Everything's going to be amazing. You're going to get phenomenal return on your investment.
Yeah.
I'm going to recommend that you are super conservative with your projections. Good old Tom Peters, under promise, over deliver, right? Yep. Always remember that. Avoid showing off your best deal ever as a case study, because one of two things is going to happen there. Either number one, you're going to freak the other person out because the numbers are too high for their context. The return on investment seems unbelievable, so they're going to think you're a bullshitter. Yep. Or number two, you set up false expectations, right? Oh, that investor got 40%. I should be getting 40%, right? So under promise, over deliver. And again, just really, really keep it super simple. And then I like to have fun with that. When I'm talking about worst case scenarios, what I like to do is kind of brainstorm what would be some of the biggest obstacles or objections an investor might have about doing a deal with me. And I like to say, okay, what could they possibly come up with? And how can I just hit that head on instead of hoping it doesn't come up? Yeah. So for example, I have fun with this. I say, okay, so one of the frequently asked questions I get is, well, Dave, if I do a deal with you, what happens if we're into the deal 3, 4, 5, 6 months and heaven forbid you get hit by a bus and you're dead?
Yep.
What happens?
Valid question though. Yeah.
Exactly. Right. So don't pretend that's not a possibility. It certainly is. So address what you would do to minimize the chance of that happening. And should it happen, what would you do to deal with that in that scenario? So again, Dave, what happens if you're, buying a building in Florida and the next huge hurricane comes in and levels the whole thing? Okay. Well, what happens if a tenant thrashes the place? What happens if tenants don't pay the rent? What happens? All these kind of things. What happens if interest rates go up? What happens if the market collapses? All these kind of things. Anticipate that and show people, hey, here's a legitimate concern. Here's what we're going to do to minimize the chance of that happening. And if it does happen, here's what we would do to deal with it.
Yeah.
Right. There's my tips.
Love it. At the end of the day, and I think we could probably touch more on this, is understanding what you're actually selling, you real estate experts. It's not the deal.
No.
Right here. Okay. Let's do it at the same time. There we go.
Okay. It's this
right
good
there.
Yeah, that's right.
It's right there.
Somebody way smarter than me said that years ago. It's, at the end of the day, your investors are investing in you, and the property is just the collateral for their investment.
Absolutely. And I think, to Dave's point is you're answering those questions with confidence, and you're building confidence with your money partners to want to work with you because they feel confident in you. If they trust you 100%, the deal in a lot of ways is kind of irrelevant because they trust you and they've built confidence in that. Right. And so
and we can be a lot more confident, Michael, if we're raising the money before we need it.
Oh, amen. Amen.
So if I could wave a magic wand for all of your followers, it would be that you have those investor ducks in a row. You got a number of investors waiting in the wings, anxiously ready to jump on your next deal. And actually, it's kind of fun. We got some clients where that's how it is. So now when they've got a deal, they don't spam everybody on their list about their deal. They send out a little email to their core group, the people that have already put up their hand, signed off on expressions of interest, that, hey, I've got a hot one, first come, first serve.
Yeah.
Give me a call, right? And then they have those conversations and roll people that way.
Love it. Man, we could be talking all day. I can't believe how quickly time's flying here. So I've got a couple real big doozy questions, I guess, for you. And I think this is going to help a lot of our people that are listening to this. And they're just like, okay, I'm seeing these obstacles. I'm maybe relooking at my pitch. And I'm like, maybe it is more complicated than it should be. And trust me, that 3 hours, it was analytical it was a binder. It was 3 hours of hell for them. And I feel bad for them. and for me, because I did
Yeah,
that
their eyes
multiple times.
glazed
Oh,
over. Oh yeah, I know.
and keep it simple, stupid. And to add to Dave, I like to use the analogy is pretend you're talking to a 5-year-old, because that's the way, if you present it well like that, you'll probably have success.
Yeah, I
But
call it the Reader's Digest version.
oh,
Remember Reader's Digest?
I remember it
It was a
well.
grown-up
Totally.
magazine
Yeah.
written at a 13-year-old reading level. So any average tween or teen could read that and understand everything in there. Same idea
Yeah.
with your presentation.
Love it. Love it. So with that being said, there's still this obstacle with our investors. And like I said before, the obstacle is usually here.
Hmm.
Okay. In there. And it's more mindset is that, why, if these individuals have got money, okay, they got all the money, they've got $500,000. Why do they need me? They don't necessarily need
Right.
me. And they just got this perspective that, oh, because they've got the money, they don't need me. And they kind of doubt themselves in a lot of ways. And the question is like, they just make this, and I'm going to call it for what it is, an excuse that's holding this situation back. So what is your advice to individuals that may be saying that to themselves and putting this big roadblock there to help them kind of get over top of that? Any suggestions on that end?
Oh yeah, big time. I mean, just because the other person has a significant chunk of money does not mean they want to learn everything you know about real estate investing and go out and actively do it themselves. So for example,
Sure.
a lot of high net worth individuals, doctors, dentists, entrepreneurs, etc., they're very good at what they do. They're very good at making money,
Yeah.
actively making money. They're not very good at passively making money. And that's what they want to dial into. They understand the value of getting their money to work for them.
Totally.
However, they don't know how to do it. And not only do they not know how to do it, they don't want to do it, right? They would much rather partner with somebody who's actively doing this that they can trust and share in the profits passively. So they're looking for a passive return on their money. So
Yeah.
if you got that hang up, get over that hang up, because there are tons and tons of people out there who really don't want to go through all the effort and the training and the blood, sweat, and tears you've gone through in getting your experience with real estate investing.
Yeah, love it. And I think, I'll share a little bit of experience on this one too.
Yeah.
And Dave, you may even have the same thing with what you do in your training, but it's funny how individuals will take courses and programs to learn how to invest in real estate. But then when they realize how much work it's actually involved, they're just like, I don't want to do any of that stuff. No,
Forget about it.
I don't here, take my money and do it. And
Yeah.
so don't make the assumption as though that they were part of your class or your course, or they've taken all these courses and they've got a wall of certificates of different programs and events and things. It doesn't mean that they want to do it. And so don't ever put that as a roadblock for yourself, because it's shocking how they're just like, I don't want to do it. Right?
Well, it's the same exact thing as the real estate investment clubs, right? You got so many of the people that go month after meeting who haven't done anything because it's the exact same thing.
Yeah, love it. Awesome. So I got a couple more questions, and like I said, we're getting right up against time. I know Dave and I, we can chat like schoolgirls here and talk about this subject a lot. And I hope you guys are finding value. If you guys got questions, this is your time. So post it on there right now. I guess the next question that I have for you is, how do you ensure kind of a project is profitable for all parties? Is there a typical structure that tends to work best versus others? Was one better than the other? What have you seen? What have you learned? Share a little bit about that.
Oh God. Well, I've seen so much, Michael, and I can't answer that question properly without understanding what kind of a deal we're looking at, because it's going to be different depending on the size of the deal, the number of investors that you need to have involved, all sorts of different factors, whether it's you're bringing on an equity partner or a debt partner, right? If you're bringing on somebody to get the deal started, or you're bringing in somebody after you've already got the deal up and running to pull out some of your equity from that deal. It depends on where their capital is coming from. If it's coming from RRSPs, or if it's coming from home equity line of credit, or if it's coming from savings or other investments. It depends on, are they going to be a little bit more active in the deal, in the sense that they are helping you get qualified for financing on the property. So there's just a gazillion different varieties.
Yeah.
There isn't any one size fits all,
Yeah.
as far as I know.
Yeah, I agree. And I think even with your analysis that you did, and again, I always appreciate your intake, because we have very similar thought processes. Stay conservative with your numbers. Like, that's the big thing, is like, don't start to tweak the numbers to make it look more voluminous
Guess
than,
how I learned that the hard way, man. I
yeah,
tell
no
you,
kidding,
it's a
right? It's just,
sucky experience.
yeah, just to get the deal secure.
Yeah.
And I use this comment a lot, is, you can tweak it all you want. You can skinny everything up. But at the end of the day, in your analysis, there's only one person you're fooling, and it's right here, right? But to add insult to injury, you're bringing in people that are trusting you to invest in something that you have tweaked. So be honest and be conservative with your approach. And this way you'll have a
And if it's
long-term
not going to be a good deal, don't do the damn thing. I mean, that's the end of the day. If you can't make it a good deal legitimately without fooling around with numbers like that.
Oh God, yeah. Yeah. And I think, you use your example as like, what is a client worth? And if you're multiplying that times 3 times plus referrals, you want that to continue to expand and grow and get bigger. And then you become like the Grant Cardones of the world, where you don't really need to work so hard to raise capital anymore, where, you just kind of post something to your small, inner
and
circle.
I think we've seen this up close and personal over the last year or so in Canada here,
sure.
Michael. We've seen some massive implosions of some really well-known real estate personalities,
Very much
who did exactly that, unfortunately, right? They tweaked the numbers, they overpromised and underdelivered. The market didn't quite go exactly as planned. They didn't have good plan Bs. Don't do that.
Yeah, good. Awesome. Love it. Love it. Love it. Love it. And absolutely true. So I'll get to my last question with you guys, and last question for Dave. And Dave, thanks again. This has been very great.
It's always a lot of
really
fun.
Appreciate this a lot.
Yeah.
And so my final question, and I love asking this of all of our guest speakers, kind of final words of wisdom. But this one specifically is really targeted for like individuals that are just getting started. So, what's your final advice you would give to investors that are maybe just getting started in getting started in real estate investing and want to raise private capital? Again, you've got individuals that may be just beginning. They don't own any properties at all. And they want to raise money. And that's also a hindrance, which is absolutely this again. What advice would you give to your investors, or give to investors that are getting started in real estate investing and are wanting to raise private capital?
Yeah, well, I think you got 4 or 5 choices there, Michael. Number 1, whenever possible for your first deal, self-finance it, right?
Yeah.
Use your own money, so you got skin in the game. You're serious. Your prospective investors know you're serious. You're going to pay super close attention to everything because you've got a financial interest in it. And quite frankly, we got to be logical when we're first getting started. It is a bit of a catch-22.
Yeah, for
Why
sure.
the hell would anybody invest with you if you have no track record, right? So if at all possible, self-finance. If you can't do that, if you don't have all of the money, then here's what I recommend. I recommend you find somebody who's actively doing what you want to do, partner with them as an active joint venture partner. So you're going to pay to play. You might not get 50% of the deal, but whatever. You put your money in the deal and you say, hey, I want to be active in this. And then you can use that as a case study for raising capital. Here's the kind of deals I've been involved in legitimately. And here's how it worked. If you don't have any money like that, then sweat equity. Again, partner up with somebody who's actively doing what you want to do. And instead of working for a paycheck, work for a tiny sliver of equity in the deal so that you can point to that and say, hey, here's a deal I've been involved in, and use it as a case study. Again, you only need one, in my opinion, you only need one successful deal under your belt to get started. If that doesn't work and you are able to convince your mom to put up the money for your first deal, or somebody puts up the money for your first deal, then I would suggest be extra generous to that person. Forget about a 50-50 split. If they're putting up all the money and you're experimenting with that with your first deal, make it 70-30 or 80-20 in their benefit. Just has to be for the first deal, just to get that as Barry Maguire says, that first damn deal done. That's the whole goal. So get one under your belt, one way or the other, and then it's much easier to raise capital for those other deals.
Love it. Love it. Love it. Love it. That's just great insight. So, Dave, I can't thank you enough. Again, lots of great, valuable information for everybody. And I'm hoping everybody's got a lot out of it, a lot of value out of this. Now, for those that are wanting to know more about you, where can individuals find you? You got a great podcast. Maybe you can highlight, where and who they are, or where to find you.
Yeah. So the podcast is called the How to Raise Capital 101 Show for Real Estate Investors. You can find that anywhere you like to listen to podcasts. We've got a really mediocre YouTube channel up around that as well. So you can check that out and watch those videos if you want. The first 9, they're pretty short and sweet. The first 9 are like a mini course on my whole, what I call money partner formula. So you can check that out. And that gives you all the resources and how to reach out to me. I think, Michael, you're going to be putting in the calculator link in the notes there. So that's my main website, you guys. Moneypartnerformula.com. You can poke around there. There's some free stuff there, and you can always click on book a call if you want to have a conversation.
Awesome. I think like I said, like Dave's just referenced, he's got some cool tools. So I'll post it in the description of the YouTube channel as well. So if you want to go check it out, check out that calculator to see what that value is going to be if you bring in some capital for yourself. Play with it. I know it's going to be fun for me. Actually, probably start playing around with it tonight just to see what it's meant to me over the years. Actually, it'd be pretty fun. So
I think it'll be a mind-blowing experience for you, my friend.
I think it will be. I really do. So, guys, I just so as we kind of wrap things up for the evening, I know we're running a little bit behind schedule, but again, I hope you guys have found value. I want to thank you guys all for attending and being part of this live in this training session. And again, I hope you found lots of value behind it. As a friendly reminder, if you haven't already, please do me a small little favor and hit that subscribe button. Again, we're trying to grow our YouTube channel. We want to provide as much value as we possibly can. So hit that like button and hit that notification bell so we can keep you informed of upcoming videos. And at the same time, for those that are wanting even some additional resources, other ones that Dave's offered, is also go to our website as well, as we do have a lot of great insight, and make sure you subscribe to our email list as well. Okay. So with that being said, I want to thank you guys all for participating. Dave, as always, absolute pleasure. Love to have you back on here again. And for those that are watching the recorded training, please post your questions, post your comments below. We will make sure we respond accordingly to help support you guys in your investing journey. So until our next live training, adios, and hope you guys all have a wonderful evening. Bye now.
Bye-bye.